Hi everyone, this is Michael Kramer of Ma Capital. Today is Tuesday, September 9th, and it's around 4 p.m. New York time. The rest of this week will get extremely busy with lots of economic data. On Wednesday, September 10th, we'll be getting the PPI data here in the U.S. We're looking for 3.3% year over year, in line with last month. We're expecting final demand month over month to rise by 0.3%, down from 0.9% last month. And PPI ex food and energy, 3.5% versus last month's reading of 3.7. Month over month, we're looking for 0.3 versus 0.9. Then on Thursday, September 11th, we'll be getting the CPI report. Right now, core CPI is expected to rise by 0.3% month over month, in line with last month. Year over year, looking for 3.1%. Headline CPI expected to rise by 0.3% month over month from 0.2. And year over year is expected to rise to 2.9% from 2.7. We'll also be getting initial jobless claims in Europe. We'll be getting the ECB rate decision as well around the same time. So there will be a lot going on Thursday morning. And then on Friday, September 12th, we'll be getting preliminary readings for University of Michigan sentiment readings and consumer expectations. Despite lots of headlines globally when it comes to politics, whether it be in France or Japan or even here in the U.S., we're not really seeing much movement in currencies over the last couple of weeks. In fact, the euro has stalled out completely at this point, and we're waiting to see if we can get some sort of clue in terms of a direction. And right now we're really just seeing the euro trading sideways, and we're just seeing the RSI also trading sideways. And this is almost giving us a sense of really a market that's in indecision at this point. Again, generally speaking, if the ECB, which comes on Thursday, September 11th, what they come with their decision, if they're going to hint more towards potentially not cutting rates further, and the Fed here in the U.S. is on a journey of potentially starting to cut rates, one would think that the euro really should strengthen versus the dollar. And maybe the market is just waiting to get past all those different news events come Thursday, September 11th. And it could possibly be that once we get past some of these hurdles, we'll start seeing the true direction begin to evolve. But what seems pretty clear is that we're not going to stay in this range-bound situation forever. And again, if we kind of just use some, logic, we would think that given where we are in monetary policy and potentially even from an economic standpoint, we could really make a case for the euro to go higher. And now that in France, President Macron has picked a new prime minister, it's possible that we could, some of those political weights have been lifted, and we could start seeing the euro move higher and move back towards the 119 area. Obviously, if the euro were to break below 116, let's say we get hot inflation data here and the odds for further rate cuts are reduced, and we break below this 116 area, you could see the euro move back down to around 114. Obviously, Britain's in a lot of the same similar circumstances with they're working on a budget over there, and that seems to be gaining lots of attention. Rates have gone higher, certainly, and the pound has really been unable to break past this 135.70 region. Again, perhaps as we get through the rest of this week and some of these questions get cleared up, we could see the pound begin to move higher again towards this 137.5 area. But failure to get beyond that and a break below this 134.20 region probably leads to the pound declining and weakening versus the dollar, probably leads to a decline back to 132. Also in Japan, we've seen similar things. Now we're going to have an election on October 4th there for the prime minister who just resigned. So still questions around what the BOJ's next move is likely to be. And you've seen really the same situation developing here with the yen. Again, given where rates are and given that BOJ is probably going to continue to raise rates into the future, probably another 50 basis points or so, one would think that the yen potentially continues to strengthen. But with this political uncertainty and the potential for a hot CPI data print here in the U.S., again, lots of reasons for us to also be stuck. A break below 146.80, 146.50, if you want to use that, potentially sets up a further round of strengthening in the yen, and really potentially sets up what could be a bigger break lower towards this 143 region. While a breakout above 148.5 could lead to the yen really weakening and probably moving back up towards this 151 area, which would be right in here. We've obviously seen some really big moves in gold. Today it looks like we put in some sort of reversal candle. Gold has gotten extremely overbought, well over the upper Bollinger Band, well an RSI well above 70. Typically when we see these types of conditions, we think, that whatever that index or ETF or stock or commodity is, we typically tend to like to think that this is going to set up a period of at least, at a minimum, sideways consolidation to give or some sort of bigger pullback, potentially in this case back to support, retest the breakout at this 34.40 area. But with the recent move we've had in gold, and given where it is technically, it's hard to argue really for it to go much higher at this point, at least if you take a more aggressive approach to this ascending triangle pattern that's broken out of, you're talking about potentially moving up towards around 37.15, and today we got to as high as 36.75, and with it also being overbought on the RSI and the Bollinger Bands, it really makes a strong argument that we should see some sort of pullback in gold back down to support, like I mentioned, at the breakout, or at least a few days of sideways consolidation in this 3600 range. Oil, Brent oil has really been struggling. Again, here's been our uptrend. Now we clearly broke the uptrend. We came back up to the uptrend, and that's where we failed. So at this point, with momentum clearly heading lower, with an uptrend that's been broken, it kind of suggests that we're looking at a scenario where Brent maybe trades lower. In fact, what I would say is that if we see Brent break below this 65.25 region, that's probably going to set up a decline to this 62.50 and then potentially all the way back to $60 a barrel. Again, momentum is extremely negative right now, and whatever hope there had been potentially for us to rise, it looks like it's been broken. And even when you look at it on an RSI basis, you can see that we're very close to breaking the uptrend in the RSI. And if that happens, I think it really confirms that the next move in oil will be lower at this point. The DAX has stalled out as well. You can see the DAX really hasn't gone anywhere at this point since May. And if you really want to kind of play it out, it hasn't really gone anywhere since March, because in March we were at 23,390 and today we're at 23,750, 770. So that's not a very big move. And at this point, again, we still have a lot of bearish momentum forming in the RSI. Again, we've had these big megaphone patterns now 3 times in a row. You can see we're just consolidating sideways more recently. Here's your 10-day exponential moving average. Notice that's been acting as resistance the past couple of days. In fact, today we tried to get above it and failed. Here's your 20-day moving average all the way back up at this area here, and that appears to be rolling over. So at least from a momentum standpoint, it seems to suggest that, there's a good case to be argued that the DAX is heading lower. Certainly from a Bollinger Band standpoint, we're inside the band. RSI is only at 43, so there's still plenty of room for this to go lower and potentially come down to this 23,400 area and again test this region again. If you want, you can make another argument. If I'm looking at the chart and it looks like there's something going on here, and perhaps there's some sort of consolidation that's being created in this region that could be telling us that, again, we're looking for some sort of break, maybe down at this point. When you look at the FTSE, also really kind of stalling out here, trading around 9,400. We've obviously seen lots of big moves in metals and such, and we haven't really seen the FTSE respond. Again, right now support is at this 9,150 area to 9,100 region. As long as this area holds up, then we could potentially look for the FTSE to rise if we continue to see certain metals, gold and copper and those things sort of keep their momentum going. Perhaps there's a chance that this can continue to rally. Otherwise, we're looking at a situation where we've seen RSI really start to break and momentum fade. And but again, as long as we stay within this, as long as we stay above this range, I think you can look for further upside. But as soon as we come into it or break below it, there's a good chance that we could be heading back to 8,800. The NDX hasn't been able to make a new all-time high yet, but it has gotten pretty close after today. You can look at the chart and see a lot of different things at this point. Here's your downtrend. That's clearly broken. So there is a chance that there is more momentum coming to the upside. Here's your RSI. It looks like right now we're right on the downtrend that's formed. So it looks like if there's a breakout on the RSI, we're looking for a chance of increased momentum. And, clearly if we get above 23,900, we're looking at new all-time highs on the NASDAQ and potentially going higher. Here's your 10-day exponential moving average. For now, we're trading a little bit above it, but not by much. And if you want to be more bearish on it, you can certainly make a case that maybe there's some sort of head and shoulders pattern forming here, with this being one shoulder, this being another, this being another, and your neckline being somewhere in this 22 to 7 to 23,000 region. When you look at the S&P 500, again, not really much going on in it, really since the middle of August as well. If you want to be bullish on it, you just have to really take out this high at 6,500, and you can see it go, higher still. You can see with the Bollinger Bands, though, volatility has been compressing some. If you also want to look at it from this standpoint, here's an uptrend, and here's potentially another trend. And you could be making a case that maybe there's some kind of, rising wedge pattern forming again. Again, very clear that volatility is consolidating, but you can also make a case here that the RSI is trading lower, but at the same time, we're also making, lower highs. So you're getting a lot of indecisions in these marketplaces at this point. When you look at whether it be currencies, whether you look at stock indexes, not just in the US, but globally, it looks like. And so we're kind of just waiting for some sort of sign that's going to tell us more. The Dow also really hasn't given us any clear direction, just kind of trading sideways now in decent ranges since the middle of August. Obviously, we're trading at new highs, but we haven't really seen a breakout yet. So again, we're not really getting clear indications. We're at a point where if we just continue to go up, we're going to be in new highs and we can see the momentum really build. And I think for that, you just really need to stay above 45,042. That's the old all-time highs. And so as long as you're above that, I think you want to look for more upside. As soon as that breaks, which has clearly been support on a couple of occasions, as soon as that breaks, you're setting up a possibility for a move back into this 44,000 range. Anyway, that's going to be all for this week. We'll see you next. Bye.